This has the potential to become a massive nightmare for crypto investors. There's a bear market and it's being met with low liquidity, and because of this, Celsius cuts 150 jobs amidst restructuring and also freezes withdrawals. Voyager blocked withdrawals and now just a few days later has filed for Chapter 11 bankruptcy protection. Three Arrows Capital files for Chapter 15 bankruptcy, and this now protects the US assets while a massive liquidation is being carried out in the British Virgin Islands. This is only the tip of the iceberg, and this is going to get a lot worse. And unlike in 2017, when these exchanges were disappearing and taking away people's money, this time around it's for completely different reasons. And if you are a crypto investor, there are a couple important lessons that you need to take away from this. Now, with that said, if you're new to the channel, my name is Eann, and on this channel I talk about ways to make money, ways to save money, ways to invest your money, bank accounts, credit cards, and just about everything to do with personal finance. So if you like these videos, if you like these types of topics, be sure to give this video a thumbs up. It's 100% free, won't cost you anything. And also be sure to subscribe with the notifications on, and that way you'll never miss any of the updates of when I post new videos on this channel. Also, if you guys ever want to talk to me one-on-one, you can message me on Instagram. The link is down below. And with that said, let's now talk about crypto. Now, in 2017, Bitcoin went slightly above $19,000, and back then there were a lot of crypto scams. In fact, research done has showed that almost 80% of all ICOs back then were just flat out scams. If you don't know what an ICO is, it's an initial coin offering. It's similar to like an IPO, where a company pops up and they try to raise money to create a new coin or app or service, and they use this ICO, which is similar to an IPO, to raise funds for their new coin or app or whatever service they're trying to provide. So back then, 78% of these ICOs didn't fail because of poor management or misappropriation of funds. They failed because they were flat out from the get-go just scams. Now, in addition to this, we have the crypto rug pull. So you would have the exchanges, which were again just scams, where the admins of these exchanges would simply collect all the coins, transfer them to their wallets, and then close the exchanges. They'd go offline, disappear, and steal millions or billions of dollars worth of Bitcoin or whatever coins were on those exchanges. Now, usually crypto exchanges operate in two main ways. The first way is they simply allow you to join their platform and you can buy or sell or trade crypto, and you pay a small fee for using their platform. They get paid, you get your crypto, you can keep it on that exchange or you can transfer it to your own private wallet, and then you're free to do whatever you want with your crypto because it's yours. Now, that's really a simple way of doing things, but there is still some risk here because crypto is not as regulated as other investments. And so, for example, this exchange could go bankrupt, and if you have money sitting in that exchange and it goes bankrupt, then you could potentially lose everything you had on that exchange. This is why a lot of people will use their own physical hardware wallets to store their crypto. And this way, if an exchange goes bankrupt, then you don't lose all your crypto because your crypto is no longer on that exchange. Now, in 2017, you had a lot of crypto exchanges that went bankrupt because of just poor management of funds. Some of them had absolutely no bookkeeping. Again, this was so unregulated, so these exchanges weren't held to any particular standards, so they could simply just do whatever they wanted with the funds because there was no one there to audit what they were doing. In fact, there's still some exchanges that filed for bankruptcy back in 2017, and we're now in 2022, and people are still waiting to get back just a fraction of what they had on those exchanges, and not even that is guaranteed at this point. Now, in addition to this, the other risk here is that if you keep your money on these exchanges, they could be hacked, and we've seen this happen time and time again. For example, Bitfinex was hacked, Binance was hacked, KuCoin was hacked, and these cyber criminals are stealing 40, 50, $100 million and a lot more. So if you're keeping your coins on exchanges, you're taking a huge risk. So there's a risk that the exchange could go bankrupt for misappropriation of funds or poor management. There's also the risk that the exchange could be hacked and you could have your coins stolen. And this is actually something that you're agreeing to, because if you read the fine print or you read the terms and conditions, which most people don't usually read, it says something along the lines that whatever digital assets you have in these accounts may be at risk of potential or even total loss. So you really have no recourse when it comes on to keeping your coins in exchanges, because if they're hacked, if they're stolen, if the exchange goes bankrupt, you actually agreed to the risk of losing everything. And now in 2022, we have a similar problem in terms of bankruptcy, but the cause is much different this time. So recently, you may have heard of Coinbase updating their terms of service, or you may have learned about Voyager filing for bankruptcy, and also Three Arrows Capital, which is also filing for bankruptcy. Now, this problem all stems from the crypto rewarding program, and this is basically where, for example, you buy some crypto or you transfer some crypto to an exchange, and they'll say, hey, you know what? If you keep your Bitcoin on our exchange, we're going to give you 10% in returns every single year for this Bitcoin. Now, there are quite a few exchanges that do this, and some of these returns or rewards can be as much as 20%, which easily beats stocks and many other investment types. So just to put this into perspective, if you had $100,000 in some coin and you were on an exchange that was giving you 20% in returns, you'd essentially be getting $20,000 in returns every single year just for keeping your coins on that exchange, and this is why this is very tempting. Now, the main idea behind this was also very simple. These exchanges would say, hey, you know what? Give me your Bitcoin and I'll loan your Bitcoin out at 15%, and then I'll pay you 10%, and I'll take 5% for myself, and that way we all make money. Now, if you think about this, this is actually fine because this is what banks do, right? They take your money, they lend it out to other people, they give you a small percentage. Actually, banks don't actually give you anything. They give you like 0.001%, and then they actually keep all the profits for themselves. But this is fine, and so a lot of people will do this because it's a simple way to make money. But the problem here comes in when these crypto exchanges, because they're unregulated and they can pretty much do whatever they want, they can lend your money once, they can lend it a second time, they can lend it a third time, and because they're unregulated, they can just keep on lending your money over and over and over. So the reason why there's a problem is because look at this example, right? Let's say I'm an investor and I go to one of these crypto exchanges and I say, hey, I have $10,000. They then agree to give me 10% in returns on this $10,000 investment in whatever coin I invested in. That exchange then goes to a second exchange and uses my $10,000 investment as collateral to get a $5,000 loan. Now, once the exchange gets that $5,000, they go ahead and they find a different exchange and they go over to that exchange and they say, hey, I have this $5,000 and I want to use it as collateral to get a loan from you of $3,000. They then take that $3,000 and use it as collateral another time, and they go to a completely different exchange and they say, hey, I have this $3,000, I want to use it as collateral and I want you to give me a loan of $2,000. Now, the exchange keeps on doing this until they've maxed out their leverage, and now they're trying to get returns from other exchanges from your investment, and this is where the problem comes in. Before you know it, one of these exchanges, or many of them in this case, run out of liquidity, and now they're scratching their heads trying to find cash. And the worst thing about this is that it's all in the fine print, but we all didn't read the fine print, and I'm also guilty of this. I never really read the fine print, but if you do, you realize that you were agreeing to this all along. So unlike 2017, this time around we have exchanges going bankrupt, but they're going bankrupt for different reasons than in 2017. And it's really unfortunate that this could have all been avoided if many of these crypto exchanges weren't just all that greedy. Now, there is really just one way that you can actually protect yourself here, and in 2017 it was the same thing, and now in 2022 it's the same thing again. If you store all your coins in exchanges, they're always going to be at risk of being stolen, being lost, being hacked, going bankrupt, and at this point, who knows what else? I mean, I can tell you that a lot of people never saw this coming. We never thought that cryptocurrency exchanges would over leverage so much that they would run out of liquidity, and when debtors couldn't pay them back, then they'd go bankrupt. So keeping a few coins in an exchange or a small amount of money on exchanges isn't that bad because maybe you need to quickly trade crypto, but keeping your entire crypto portfolio on an exchange is just a bad idea, and you should, if you are investing in crypto, choose a hardware wallet, and that way you know for sure that your Bitcoins or whatever crypto you have are actually safe. And if Coinbase or some other major cryptocurrency exchange is hacked or goes bankrupt, it really doesn't matter because your cryptos are safe. Now, if you guys are watching and you still have crypto or a large amount of crypto hanging around in exchanges and you're looking for a way to take it offline, I would recommend the Ledger Nano hardware wallet. It's relatively inexpensive compared to other crypto hardware wallets, and this is how you can keep your crypto offline, and this way, or this is the only way that you can actually be sure that no matter what happens in the crypto markets, whether it's hacks or bankruptcy or just admins deciding to disappear with funds, your crypto will actually be safe. I'll leave a link below to that down in the description. And with that said, comment below, let me know if you had any of your money lost on any of these exchanges. And also let me know if you think that more exchanges will be going bankrupt in the near future because of the same problems. Now, before I end this video, here's also one important thing that I stress a lot, and I'm going to mention it here again, although I may sound like a broken record at this point. But if you are keeping your money on exchanges or you're investing in crypto in general, and your investment goes down by, let's say, 20 or 30%, and you can't sleep at night, you can't concentrate, you're just constantly worried about your crypto or that your crypto portfolio is down 30% or 35%, then that is a sign that you are investing way more than you can actually afford to. So keep that in mind. Don't invest more than you can actually afford to invest. Don't risk a lot of money that you may need soon, and do not invest money that you know that if you lose it, whether it's a temporary loss, a loss in the short term or long term, you're not going to be able to sleep without having that money. So with that said, thank you guys so much for watching. All the best with your crypto investments. Remember to keep your crypto in a hardware wallet. That's the only way you'll actually be sure that it's safe and secure. And I'll see you guys very soon in the next one.